Welcome to Post-Market Report. News and insights. The countdown to Budget Day has officially begun, and the markets are partying like it's Diwali. The Sensex has rocketed up by a whopping 741 points, closing at a solid 77,500, while the Nifty soared 259 points, settling at 23,508. And guess what? The broader markets stole the spotlight, with Nifty Midcap 100 and Smallcap 100 jumping nearly 2% each. As the closing bell rang, Dalal Street witnessed a power-packed performance led by PSU and energy stocks. The Nifty CPSE, Nifty PSE, and Nifty Energy indices stole the spotlight, each surging over 2.6%, fueled by strong institutional buying and pre-budget optimism. The leaders: Nifty CPSE, 2.67%, and Nifty PSE, 2.64%. Government-backed stocks continued their dream run, as expectations of policy support kept the bulls charging. Nifty Energy, 2.63%. A massive rally in energy stocks powered the index, riding on strong global cues and expectations of sectoral reforms. Nifty FMCG and Nifty MNC, 2.04%. Consumer-driven stocks stayed resilient, hinting at a strong demand outlook. Nifty Realty, 1.94%. The real estate sector kept its momentum as investors anticipated favorable policy measures in Budget 2025. Nifty Metal, 1.20%. Metal stocks shined, benefiting from firm global commodity prices. The laggards: Bank Nifty and Nifty IT, 0.56%. Despite gains, heavyweight sectors like banking and IT lagged behind, witnessing profit booking after recent rallies. Nifty Pharma, 0.09%. Pharma stocks barely moved, as investors remained cautious ahead of policy announcements. The bulls reigned supreme today. All sectors closed in green. FMCG, Consumer Durables, PSU banks, auto, and realty led the charge. Top gainers: Tata Consumer, Bharat Electronics, Trent, L&T, and Coal India, up to 6.24%. Top laggards: Bharti Airtel, JSW Steel, Bajaj Finserv, ITC Hotels, and ICICI Bank, down up to 0.82%. Why this rally? Just weeks ago, uncertainty loomed over the markets. But suddenly, the bulls charged in, and the Sensex and Nifty soared. What changed? Pre-budget optimism. Traders are betting big on tax cuts and a massive capex boost, hoping that Finance Minister Nirmala Sitharaman will deliver a growth-friendly budget. ECB's surprise move: a 25 basis points rate cut by the European Central Bank softened US bond yields, sending a ripple of optimism across global markets. Dip buying in action. Despite foreign investors pulling out money, domestic institutional investors and retail traders are fearlessly buying the dips, keeping the rally alive. SEBI has a new rulebook, and traders need to pay attention. You're a high-frequency trader, making rapid moves in the market. Suddenly, SEBI tightens margin rules, restricting leverage. You really need to think on your trading strategy. Stricter disclosure norms mean companies will have no place to hide. Corporate results will now be under even more scrutiny. And let's talk about T+1 settlements. Trades will now settle faster than ever. Sounds great. Sure. But it also means risk management needs to be razor sharp. because there's no room for error. So for traders, the clock is ticking. Adapt fast or risk being left behind in the dust of this ever-evolving market. The dollar index surged by 0.39%, touching 108.2, as global investors turned risk-averse ahead of the Fed's next move. A stronger dollar typically pressures emerging markets and commodities, but today's rally suggests capital inflows into safe haven assets. This could impact the rupee's movement, making imports costlier and potentially affecting corporate earnings of Indian companies with high dollar exposure. Gold prices climbed 0.30%, trading around $2,804.57 per ounce, fueled by a combination of global economic uncertainty and dollar strength. Despite the stronger greenback, gold maintained its shine as a hedge against inflation and market volatility. If global interest rates remain under pressure, gold could continue its upward momentum, attracting investors seeking safe haven assets. Crude oil edged up slightly by 0.08%, closing at $72.81 per barrel. The price action remained muted as investors weighed rising U.S. inventories against potential supply cuts by OPEC+. For Indian markets, stable oil prices are a relief, as lower crude costs help ease inflation and reduce fiscal pressures on the economy. The Indian rupee remained almost flat, ending at 86.61 per USD, minus 0.02%. While a stronger dollar typically weighs on the rupee, today's resilient domestic market performance helped offset further depreciation. With the Union budget announcement tomorrow, currency markets are expected to remain volatile as investors assess fiscal and economic policies. Dalal Street's pre-budget rally is on fire, but with Budget 2025 looming, will the momentum last or is a shake-up coming? What's your take? Will the budget fuel the rally or crash the party? Drop your predictions in the comments.